I think over the past decade, trends have been leaning towards an aging population. The average age of a U.S. farmer is 58 and a half, which is up from 2017 and from 2022. And in general, the industry is experiencing an aging workforce with not as many young professionals taking those places. So there's a lot of opportunity in agricultural finance and the ag space more generally.
Welcome to Actualizing Success. In this podcast series, our in-house advisors discuss today's finance and technology topics with an emphasis on solutions that embrace tomorrow.
Good afternoon, everyone. Today we've got an interesting topic that we've been working on internally for quite a while. It's one of those things almost like a perfect storm, but in a good way, where a lot of different things came together. And so today we're going to talk about agriculture finance, or what we call ag finance. And here today, along with me, Matt Seu, are three guests. One, we've got John Pomeranski. John's one of the directors with the firm. We also have Jon Cooper. John's a senior manager with us. And then Caroline Pickering is a senior consultant. And so all three of them have very different experiences and passion around this topic, which we'll hear about as we go through it. And so, as I was mentioning, it's almost like a perfect storm. Our background ranges from working on affordable products that reach rural America at the GSEs to helping Farmer Mac achieve a lot of what they've been trying to accomplish over the years. We've done business at Department of Agriculture across many different dimensions, which we'll go over later, as well as some entities in the farm credit system, including associations. And so when we looked at that, we realized, wow, we've got a lot of experience in this rural America financing piece, not just mortgage, but farm loan and other. And we started to do some digging and realized that it's really a fairly underserved market, where in our traditional mortgage business, we see a lot of technology that are widely and broadly used. It's less so much that way due to the diversity of products and lending vehicles and different things of that nature. So today, we're going to start exploring what it is and then talk through some other topics. But first thing I think would be great if John P. Pomeranski, if you could just give us somewhat of an overview of the big picture in terms of how all of these pieces fit together. You want to give us a little bit of thought on that?
Yeah, sure. Thanks, Matt. So the first question is, what is the farm credit system? This is something that a lot of folks, especially out in pure residential world, might not necessarily be familiar with. So the farm credit system is a nationwide network of borrower-owned financial institutions. It's not just a government agency, but it was created by Congress in 1916. The goal is to help farmers, ranchers, and rural communities get access to reliable credit. So there's three main tiers to this structure. You have local associations, you have farm credit banks and agribank, and you have the Farm Credit Administration. To break these down, the local associations are the customer-facing institutions, kind of like local banks. They lend money to farmers, ranchers, and agricultural businesses, from everything from buying land to upgrading equipment. Then you have the farm credit banks and agribanks. So the local associations will then borrow their funding from the regional farm credit banks. There's 4 of these. And then there's one big wholesale lender called agribank. These regional banks act like the backbone of the system, providing the capital to the local lenders. To help regulate it, you have the Farm Credit Administration, which is known as the FCA. It's more of the watchdog, making sure everything's working safely, soundly, and fairly. But again, that does not lend money to itself. So the interesting piece in this is who actually owns this farm credit system. Well, in this system outside of the banks, you have the borrowers as part owners. So if you take a loan out from a farm credit institution, you become a member. That means you can vote for the board or even share profits in the form of dividends.
So, John, we just talked about farm credit system, but when I originally opened, I talked a little bit about the Department of Agriculture, the rural development area, as well as Farmer Mac. So can you just maybe explain a little bit about how they are connected or not, and how all of it somewhat makes up this bigger, broader ag finance ecosystem.
Yeah, so outside of the farm credit system, you have several players, and sometimes can be competing for different resources or market share. But Farmer Mac acts as, say, a Fannie Mae or Freddie Mac would act in the secondary market, providing liquidity to some of the banks for farm operations as well as other agricultural functions. And then you have USDA, who, in my experience, deals more with some of the more rural residential areas, providing funding to some underserved populations. So they help play a picture in this, a very important player in this picture, to go along with the farm credit system.
Yeah, that makes sense. The one thing I've noticed too on all of this is that when we looked at it internally and started looking at how the puzzle pieces fit together in the bigger, broader ecosystem, I'm not sure that that's how any individual entity, farm credit, Farmer Mac, agriculture, looks at it. They somewhat, work within their own construct, so to say, or within what their mission is. I mean, all of them in one way or another are mission-oriented entities, but they all are serving similar parts of the country and for similar purposes. But anyways, and so, Caroline's here today. Caroline's been working with us this year, and it was somewhat coincident that when we brought you in, that we didn't really understand where you're from or your interest in all of this. And it's been real clear that it's something that's important to you.
Yeah, thanks, Matt. I'm originally from Central Illinois, which is a big farm area. McLean County is one of the most agriculturally productive regions in the United States. And my family has been farming in Southern Illinois for decades. My uncle is currently a farmer, and I grew up around Farm Credit, the Farm Bureau. So I understand kind of the system from a personal perspective. And I also studied rural development and agricultural policy in college. So this is also a professional academic interest for me as well.
In terms of that, when you joined us, how long did it take for the light bulb to go off in terms of, hey, Actualize is involved in this?
I actually think it came up in our interview together, Matt, or maybe with actually JP, that some of the projects you were discussing that needed some support that I had experience in were actually related to rural development and agricultural communities. So once I joined the firm, I really learned how much you've been doing in this space for a long time, from different parts, from the securitization side, and now I'm currently working on a project on a loan origination system. So I think it became clear to me that this was something that was important. It overlapped with our affordable work, and it was part of the reason I joined Actualize.
Yeah, and to be honest, I mean, Caroline has been a big part of the momentum that we've had on this and has really helped us on the research pieces of what we're trying to do. Jon Cooper's also been heavily involved in some of the work and is currently doing a project at Farmer Mac and has worked in other areas in and around this for a long time. So, John, in terms of the size of the market, we're going to talk a little bit about somewhat of the paradox about the size of the market and the fact that it's not necessarily one that's being served. Do you want to just talk a little bit about that for a little bit?
Yeah, sure. Thanks, Matt. So overall, let's say the Farm Credit Administration has about $450 billion in debt outstanding. So the Farm Credit system itself has probably around $430 billion in loans outstanding. Now, if you look at U.S. commercial banks, they're at about $200 billion in loans outstanding to this market. And USDA, I think, is around $30 billion. Right? So if you add that all up, it's almost $675 billion in loans outstanding in this market. Right? So it's big. Types of loans they do, there's about half of them are real estate related, but they also do what we traditionally consider commercial loans, right? So for production loans, it's about 20% of the market. And production means basically equipment. Processing and marketing loans is around 12% of the current outstanding loans. And then rural power and infrastructure is about 10%. So as far as the market fragmentation we kind of see, right? So as JP was mentioning earlier, there's 56, 60 regional banks who are customer service facing agents. They're kind of broken down by geography, right? So one, the market's fragmented on geography. The second factor affecting the market is kind of the nonprofit / co-op model, right? So there's no real profit incentive. The incentive for these guys is to make loans as cheaply as possible for their members and their clients. Third reason we have fragmentation problem is just the different asset types, right? It's not all cookie cutter, not a mortgage loan, right? So there's real estate, there's equipment, there's processing, very different underwriting methods for each product type, right? All of that leads to, there's no one big dominant player in the market. The market's fragmented, it's unique, and it's not serviced well by a lot of like your larger traditional software or consulting companies, right? Because when you come at it from that level, there's just not enough squeeze. There's not enough juice in the squeeze there for them, right? So I think it's a natural fit for a company our size.
Yeah, what's interesting about that is, so because we are a little bit smaller, although not small by any means, we tend to look at opportunity that presents itself, and for us, it's a clear picture that what we do in this ecosystem and what we have done can really impact. And so where, pick a big name consulting firm, any of them you want, and they're going to look at something and say, well, if I can't find this market to yield 5 to 10 million a year, well, I'm not going to focus on it. And much the same as we've done in other things in our past, including our work in Mismo, we find that those are good areas to try to get market share and penetration. And it fits in with what we try to do in terms of our customer service and working with the different players in that. And so where the big guys may not be interested, we're very interested. And, I had mentioned some things at the beginning about what we do for customers in the space, and I'll rattle off some specific ones. JP, you can add in, and then quite frankly, if anybody else wants to, they can. Caroline mentioned 1 minute ago about implementing a loan origination system that was at agriculture. We've also done quite a bit of Mismo standards work in this area, both in the farm loan space as well as the mortgage space, including what we hope to be some good work going forward on defining some interfaces with Department of Agriculture's guarantee loan business. We've had different customers throughout time who have needed additional Mismo help, and we've done quite a bit on systems implementation work, everything from origination and servicing to trading and finance, and some things that I briefly touched on earlier at one of the GSEs. We put in a big time affordable product with them that was targeted directly at rural America. And so, I think from my perspective, it's been a pretty diverse set of things that we've done with a lot of different entities. John Pomeranski, you've been involved in quite a few things. What am I missing? What are some highlights to some of the things you've been working on?
Yeah, thanks, Matt. Just a couple of things. I mean, it's definitely been equatable, our life alone expertise in applying it in the agricultural finance space. I think a couple other things that we've kind of worked on in accounting and finance is implementing financial transformation systems that help automate reconciliation and reporting workflows in that area. And then just to mention as well, major implementations and servicing systems, both in commercial and what the farm community would call residential lending. And applying these things are able to reduce manual processes, friction, improve controls, improve user experience. But I think the key thing in this is that, that innovation and adding the expertise and reducing these processes, more importantly, help reduce costs in the long run. And in this system, like we talked about, by reducing costs, you have more money to lend out to the communities.
Yeah, I think the other piece that I kind of alluded to this earlier there isn't, sometimes there's not a natural fit for some of these programs and lending vehicles. If you think about it, some of the associations, they offer all different types of products, and you can't have a system for all of them. So a lot of times people cobble things together. One customer that we're working with is building their own origination system. And yet at the same time, even at one of our GSE clients, Farmer Mac, they have a broad diversity of things too. And so I think our experience in working with lots of different product types across residential mortgage, commercial, farm, other types of personal or consumer lending, leasing, it just really, really lines up well with the diversity and the different types of needs that exist within ag finance. And so, we're going to be really trying to push forward. There'll be some information on LinkedIn that'll come out not too far from now that'll show a little bit more about what we're doing. Hopefully, we can announce some speaking engagements. There's a good chance that we may have some events where we talk about this topic. And maybe even in the future, we can invite some of our customers or our partners to talk further and deeper along these lines. And so, again, I think, we've had a pretty good run. John talked a little bit about a while ago about innovation. It's one of the key things that we're looking for in this space, just that so much of it has been really bespoke almost. And so with that said, Caroline, I know you wanted to follow up a little bit in terms of some of your thoughts on how that may be impacting this part of the market or this demographic. Do you want to give us some thoughts there?
Yeah, so the agricultural industry has had, I think over the past decade, trends have been leaning towards an aging population. The average age of a U.S. farmer is 58 and a half, which is up from 2017 and from 2022. And in general, the industry is experiencing an aging workforce with not as many young professionals taking those places. So there's a lot of opportunity in agricultural finance and the ag space more generally for young people. And a lot of what Farm Credit does is young farmer outreach and extension services and special programs to kind of encourage younger generations to keep their family farms and to continue farming. So I think from my perspective, as someone earlier on in my career, this is kind of a space where there's a lot that can change in the next decade and a lot of room for innovation.
Yeah, so I think what's interesting too is that, a lot of our customers also include some of the larger entities in the finance space, especially in the residential and home ownership space. And so we have seen quite a bit of innovation there. And I would assume that some of it can, flow downhill a little bit to this sector as well. We certainly are going to try to help our customers with best practice that we've learned over our almost 2 decades now. And hopefully that's successful. So, we had a good conversation today. Thanks, John and Caroline for that. I guess we're going to wrap up now. And of course, you can find us on our website. And if there's any things that anyone listening wants to talk about, you can reach out to us. That's not difficult on our website either. And just want to thank everyone for listening to this. And hopefully we'll be having more conversations like that in the future.
Thanks for joining us for today's episode of Actualizing Success. Make sure to visit us online at www.actualizeconsulting.com, where you can explore our service offerings. Don't forget to subscribe to the show on iTunes, Spotify, or your preferred platform. If you've enjoyed what we talked about today, please consider leaving a review and following us on LinkedIn. If you have any questions or would like to share your opinions with us, please send us a note at podcast@actualizeconsulting.com. We look forward to hearing from you.